Who will get first? Who will get rattled first by this?
Well, we believe some of the tier 2 banks. So
yes, I mean in terms of investors classes, shareholders.
Well, for investors who are more focused on like the dividend payment aspect of investing, we believe they might start to turn their attention to some of the, if they have to remain in banking space, some of the banks that will remain unaffected by this. But if you also consider the fact that we've seen a lot of capital appreciation from these stocks since the start of the year, you might start to see sell-offs in some of these companies that will actually be affected by
there could be a sell-off. There was a major rally towards the last year into January. So you think with this announcement, some folks will just feel, hold on a second, can I quickly cash out some money? Or sell down a little bit on my portfolio?
It could possibly be a knee-jerk reaction that we would see, especially in the tier 2 bank space.
Knee-jerk reaction by retail investors, most likely?
Mostly retail investors.
Yeah,
because for most of the institutional investors who have like a more longer-term view of investing in the market, looking at fundamental analysis of the banks over the past couple of years, analyzing their performance, we believe they would have been more positioned in the tier 1 banks. So you have the likes of the GT Bank, Zenith, UBA, Access as well. So we don't believe this will rattle them.
We saw the new pricing methodology for a par value and what have you from the stock exchange just about 2-3 weeks ago now. Now the central bank is coming with this no dividend. Okay, so this is a trading trend. Now, do you think this will be another, maybe it will be long, maybe it will be short, we don't know how long, what you call the knee-jerk reaction will be on this. Do you see that this may just form a new trend as we start a new week?
Well, yes, it could possibly shape trading activities this week. Like I mentioned, with the knee-jerk reaction, just reading the headline, banks with bad loans are not allowed to pay dividend might just result in some investors deciding, oh, I'm going to sell off on this bank, I'm going to sell off on this bank. But like I mentioned, taking a deeper look into what the requirements and guidelines that have actually been stipulated by the CBN are, then you might see, okay, this bank that I'm invested in might not necessarily be affected, so maybe there's no need to sell off now.
So if a bank hasn't reported its earnings for 2 years, like Skybank, so I'm going to name names here, and Unity Bank is also been base forming, kind of, and hasn't paid dividend, should I get worried if I hold the shares of Unity Bank or Skybank? Should I really get unnecessarily worried about this latest directive from the central bank?
Well, for the fact that the bank hasn't released an earnings update in past 2 years, you should be worried about that, even investing in the bank, because you cannot track their performance over the past 2 years. We know the developments that we've seen in the economy, in the banking space as well. So investing in those banks will basically just be some sort of speculative trading, try to trade on price movement and speculate on that. But those still remain very risky investments.
Broadly speaking, do you think we have very serious issues to deal with in terms of NPL and CRR in our banking jurisdiction? Here, if you look at the oil and gas, in which some of the banks, hitherto in Tier 1, finally found themselves in Tier 2 because of those exposures over the last 2, 3, 4, 5, 6 years when we tried to make a comeback in terms of the oil and gas. Then you have the power sector as well, those who have exposure. Then you have the Nine Mobile, Etisalat, and that hasn't gone away. Some of the Tier 1 banks that we talk about here have very decent and very big exposure to Nine Mobile that hasn't been cleared as of today as well.
Yes. So what we've seen from most of the banks is they've tried to restructure some of their loans to reduce the impact of the rising NPLs. Another trend that we've noticed in 2017 and even 2016, based on the risk perception in the broader economy, we've also seen banks quite reluctant to extend credit. So if you look at total loans across most of the banks, we had a general decline in loan extension. All these factors are all in a bid to reduce the impact of rising NPLs on the banks. So yes, it's a source of concern, but the banks have also taken steps to ensure that the impact of this on their capital buffers and their overall performance is also limited.
Okay, we'll have a lot more conversation around this later on. I'm sure when the annual general meeting starts taking place with the banks and no dividend is declared, I'm sure quite a few shareholders are going to be very angry and throwing up their waving at the annual general meeting and say, no, Mr. Chairman, we want cash dividend. You have to tell us when we'll pay cash dividend. It's been long I attended any of this shareholders meeting for some time. One final question, and broadly speaking, about 2 minutes. What's your outlook on the earnings season that we're looking at coming in the next few days?
Well, based on the improvements that we've seen in the economy, we believe performance of most of these companies will be largely positive. We're more optimistic on banking space, like I mentioned. Higher interest income due to the higher interest rate environment that we saw in 2017, and also the fact that banks have taken steps to optimize their cost levels to reduce pressures on profitability. Looking at the industrial goods sector, so for the cement manufacturers, we expect them to benefit from higher cement prices, improvements in the economy, which would translate to more construction works going on, and the fact that they've also taken steps to restructure their sources of power to move to cheaper sources. We also expect this to boost their performance. And looking at the consumer goods space, we've also already seen Nigerian breweries release their own 2017 results, which was largely positive. Like I mentioned, with the improvements in the economy, increased consumer spending as well, we believe this will translate to positive performance for them. And as the FX issues that weighed on their performance over the last 2 years have been largely cleared, we also expect this to be positive.
Okay, we'll get you back in the next few days.
Thank you,
this is to having a great weekend.
Thank you.
Thanks for having a great conversation starting the week